Welcome to an update to the Federal Milk Marketing Order 33 that I do specifically for Nobis Agri Science. And I'm recording this on November 21st, and this is Dr. Lawrence Jones from FARME Institute. All right, so here is your Order 33 statistical uniform price, which was $19.66, and it was up about 28 cents from last month. And if we look at that historically, again, this is a very good number relative to any time prior to this run up in 2022. And if we compare to that, we're down about $6.12 on the statistical uniform price. All right, so let's look across the country. And in fact, the statistical uniform prices went up about 40 cents when they were weighted on the different federal orders. Again, you were up 28 cents. And a large part of what makes statistical uniform price go up or down is the actual class changes. And so class 3 came down $1.55. Class 4 went up $2.40. And the other part of that is the depooling numbers. And so some of the orders significantly depooled class 4, which means they took the 21.49 out of the pool, which is going to then lower kind of their overall value. Again, the highest numbers, were in the southeast, came up about $1.30. The northeast came up about 70 cents. And then the ones that depooled, you'll see, are negative or pretty close to zero. Here's the class 1 utilization. You're just a little under 40%. And if we look across the nation, the class 1 utilization is around 27. So you're a little higher, class 1. Your class 3 utilization is very good at 45 and a half. And across the nation, we're 55 and change. But part of that is because there's so little class 4 because of the depooling. But you're going to be impacted by that class 3 number that came down, quite a bit. And so that's why your overall statistical uniform price was down a little bit from last month. And class 4 utilization, if we look at the averages, 6.3, you're right at 3.3, and you actually came down about 3. And again, the ones that depooled are going to have basically none. I mean, there's just almost no class 4 because it's all out of the market. So this is the change in the class 4 utilization. Again, you guys dropped about 4 percentage points, but look at California down 10, the Northwest down a little over 10, and the Midwest down about 6. The Northeast is always the truest order because we don't depool only one time a year, and so that was flat. This is a graph of your production of class 3 and class 4. So class 3, you can see, is very good, about 25 million pounds a day. That's up from this 19 million. Again, the difference between here and here is a new cheese plant. And then our class 4 is way down because we've been depooling. Again, we normally have about 10 million. In fact, we ended up, around 2.5 million. So if we look out for the next 10 months or so, 12 months or so, class 4 is going to be much higher than class 3. So we're going to expect class 4 to continue to be depooled in all the orders that do any kind of depooling. Component values are very strong. Again, across the nation, it was 417 for fat. Last month, it was 404. You guys around 411. Lowest is in Florida at 388, and the highest in the Northwest at 442. But overall, very, very good. If we look at yours in particular, this 411, is up 300 from last year, and these numbers are just continuing to go up, and we don't expect that to change. Fat numbers are just very, very strong. We only get protein for a few of the federal milk marketing orders. You were 326. The highest is Northwest at 349, and everybody else was in that 3.2 to 3.3 kind of numbers. And specifically, you were 326, and last year 328, so down just a little bit. And I think this downward trend on protein is simply because protein has been so terribly cheap that there's no reason to be feed for it, and there's no reason to kind of be managing for it. It's all about fat relative to price. We talked about some different trading options, and so I always like to go back and tell you what we had said and how it came out. So I think in September we talked about some December calls at around $19 calls for 50 cents. So again, that would have been up in here somewhere. And where are we today? And as of just a few minutes ago when I grabbed this, December's trading at 1647. It might be trading up just a little bit here yet today, but it's somewhere under 17. And so those look like very good calls. In October, we actually had sold some 1875 calls for 50 cents. So these are going to be in here somewhere. And if we look and see how January is trading, as of this morning, it was 1664. So those also look like some very good calls. And if we go back and look at why we were doing that is because of this premium that existed there. We expected these to come together in some way, shape, or form, either the contracts going down or the futures going up, but nonetheless, we did not expect these futures to go up significantly, so that's why we're selling those calls. So here we are this last week, just to kind of tell you what we'll continue to do is we've been selling some 1850 calls for February, so that's going to be in here for 50 cents. And again, the reason we're doing that is because of this premium that is here. And so next month I'll let you know how those are coming together. But I think 1850, and actually you add these together, so a 19 number for February is going to be hard to get with where spot price for cheese are at this point. So we're getting ready to finish up November. We've had 2 of the National Dairy Sales reports. So again, dairymen hate to see this, but you could have sold a lot of your November milk for $20.50 back here in the end of 2022, or even in late as June of this year at 19. But here we are pushing 17.10 is my estimate. And this graph down here kind of looks at the last 5-6 days as to the fact that we've been under a 10-cent movement in that contract. So this is what we call in glide path. It's not going to change very much between now and here. I do work closely with StoneX, and they've been right in that 17.13, 17.19 kind of estimates. We're both pretty close for class 4. We expect that to be at $20.60 and change. But overall, we expect butterfat to be around $3.37, protein around $1.41 or 2, and other solids right around 19 cents plus or minus a quarter cent. I want to talk about milk production because I am a couple of days late compared to normal, and so we have had the milk production report out. And so this was the federal milk marketing data. So we saw a lot of red on this, but again, a lot of those were depooling. So when you depool, you take milk out of the order. So month over month, you expect that to change. But the one thing I saw was 100% in the Northwest, 103, 101 down in the Southeast, and 100 in the Northeast. So I kind of thought that we would be pretty well flat. And this pivot table over here on the right is just basically all of the previous months that USDA data came out. And historically, month over month, October was pretty well flat with September. But we were all shocked yesterday when USDA released the data. And so this is the daily production back to 2015, and the red dots are previous October numbers. And seasonally, we thought this would come in on this green dot, but it came in quite a bit lower. And so when I look at all of this data, what I look for is, are we going to have an outlier? And right now, I would say this particular October, it was an outlier. And so we use that to say, is there something in the industry that's, actually changing a little bit here? So a couple things drove this. One is the milk per cow. We've been on a very upward trend at 1.1% per year. We thought we would be, right this green dot, but we actually came in a little bit lower. So it's a bit surprising that milk per cow came in as low as what it did, given, favorable feed prices and favorable weather conditions. So here are the cow numbers that were released by USDA yesterday. We were at 9,370,000. A couple things about this. They actually raised last month, and so it didn't come down quite as much as some had thought it would. But if we look at this historically, we're back to what I would call the support number from when we fell off last time, and we're starting to be closer to the numbers that we had in 2019 when we had good milk prices. But I still suspect that these numbers are going to go up, and I just am feeling uncomfortable about the cow numbers that USDA has, because they've come back and revise things from time to time. And part of the reason is the culling data, because for the week ending November 4th, we culled 57,767 animals, when historically we've been culling closer to 60,000. So I've got a little graph here, which is 32 to 34% the USDA cull rate. And I always argue, as long as we're in that, we have fairly stable herd size. And if we compare this November to a year ago, which is these red lines here, we're at 2.31 percentage points lower call rate than we were a year ago. So how can we not be gaining cow numbers is a question that I have. All right, so here's the global dairy trade. This is hot off the press as of just a couple hours ago. Month over month, it was flat, so there was no change. And part of that, cheddar was down 9%, but whole milk powder was up 1.2%. So basically, I would call this a negative global dairy trade, because put into our prices for what we figure impact us about $1.16 to the downside. Non-fat dry milk dropped 5 cents. We're kind of expecting that spot market to drop 5 cents here right quickly. And the world price is like $13.74. So again, very low compared to where we are. So what's milk prices been doing? So this is a graph of the actual class 3, which is orange, which is really probably all we should worry about here. So we came down, we went way kind of back up, kind of coming down here. And this is probably a 2-week lag. So right now this would suggest that prices are coming up just a little bit. But in the last 2 weeks, prices have softened. Here we are with the spot cheese price. And the last month, we thought this might be headed up here a little bit, but in fact, we've actually come down and we're actually below what I would call the support line where we were before. So as of right now, spot cheese is headed south, and overall class 3 prices are under a lot of pressure. Part of the reason is if we look at cheese production, again, we're going to get a cheese cold storage report and a dairy products report here right quick. But we're producing a bunch of cheese. And so right now we're producing about 96.7% of the capacity that we've had of our different cheese plants. So we're operating at a fairly high capacity. And I suspect that these numbers over here for August and September are going to be outliers from where we have been historic. Spot whey has been going up, and that's been the savior. And we've seemed to be in this 36 to 42 range. And I think we've been kind of range bound here just recently, from 40 to 41, 42. There's a lot of hope that this is going to be headed up significantly, but at this point, I think I don't actually see that until we start importing a bunch of whey for piglets in China. Butter's been the one that's been just dropping here, but the issue is the futures contracts had already figured this out a long time ago. So this drop in butter and the spot market hasn't led to a significant drop in class 4 prices, because it had already factored it all in. Non-fat dry milk has been somewhat sideways range bound, but given that global dairy trade, I would not be surprised to see this non-fat dry milk drop about 5 cents here in the next few days after the holidays. All right, let's just turn to grains a little bit. So this last week was kind of an interesting week. We had some significant down pressure, but we recovered a little bit on Friday. And so this is a weekly change. So what's more importantly are the channels. So overall, corn and bean meal came up a little bit this last week. And part of the reason that we're worried about all of these is this is the precipitation for the main Brazilian soybean plant area. And it went from being reasonably dry to all of a sudden being reasonably wet. But right now, this is appearing that this was more of a frontal boundary that moved up into this area and provided some rain, but it is not providing the monsoon rains. So the monsoon generally comes from this direction. So right now, the forecast is once we get through this frontal boundary, it'll retreat and we'll be right back in the hot and dry. And if we look at our channel, so this is corn, and it's basically at support. And so there's been no big movement in corn. So we would expect that if the soybean crop in Brazil does not get planted on time, If they start going more to cotton, that the safrinha corn crop will be significantly delayed, which is then going to cause overall world prices of corn to go up. That probably should happen more like in July of next year as opposed to now. But soybean meal has been very much on an upward trend. I'm hoping everybody got their bean meal booked for the year back here, in October sometime when we were down here at the support level again. Soybean meal prices have been definitely headed up here. If we look at our 50-50 dairy blend, that's 50% class 3, 50% class 4. We just can't seem to really break this 19 number. That's where we've been hanging. We've been a little bit lower than that back here in July when we had that significant downturn and we were higher a year ago. Our dairy margins, which is no more than 50-50 minus the soybean and cornmeal, have been hanging right in this 13 number. Some of them, we've been a little bit lower when we had lower milk prices, but 13 seems to be the resistance at this point. There's a significant cold intrusion coming into the western part of the United States, and so that's got everybody all nervous and jerky about the polar vortex. So if we look from the top of the globe down, this polar vortex is seeming to be very strong, very circular. So right now there doesn't seem to be a huge outbreak. And the number that we all kind of watch is what we call these zonal winds. And the important part here is the black line in the middle is kind of the average. So right now the zonal winds came down a little bit, but now they're hanging right along that border, and so we don't expect any sort of big polar vortex. Now in a couple months that could all change, but right now I think this is just a intrusion of cold air. The subtropical jet is very strong here across the southern United States. So when we put all that together, we've got significant cold air coming into the center of the United States in the 6 to 10 day forecast, and then there's going to be more precipitation to the south wherever that subtropical jet is. So again, for Michigan, a little bit colder and probably a little bit drier. And just finish up with the last 30 days of the Mississippi River, because this has continued to be a big issue. It did recover up to only 5 feet below stage, but it has just fallen back off again. And if we go back to the graph here where we're going to have, below or near normal rain through that Mississippi Valley, that's not going to help this Mississippi River. All right, that's it for me. Hopefully to give you some ideas as to where things are headed and some options for protecting milk prices. But overall, I think we're kind of in a position where the industry thinks that there's going to be a significant increase in milk prices, but I'm not sure that overall that's going to happen.